Good afternoon and welcome to the first episode of the Digital Dividend, a bi-weekly intake on the most prominent news, trends and features surrounding fintech, digital finance and platform economy. I'm your host Mikayel. With us today is Matt Kus, Head of Origination of Developed Markets at Fasanara Capital, and our guest from SME Finance, Mindaugas Mikalajūnas, the CEO of SME Finance. We'll welcome you all and hope to have an interesting conversation.
Yeah, so I would just say Mindaugas Mikalajūnas, we're very happy to have here, the CEO of SME Finance, and I believe you were employee number two. Is that correct?
Actually, besides the founders, it's two, but officially it's the first one. I'm first
There
one.
you go, number one, and it's been quite a while now in your growth path, growing from startup non-bank lender to now being the largest non-bank lender in Lithuania, Latvia, and Estonia. I think you have some pretty big plans in the next couple of months and quarters, and we're really excited to have you here to talk about those plans and also maybe some of the challenges you faced along the way. Because one of the things we want to focus on here at the Digital Dividend is not just kind of a promotion of firms here, but also sharing stories of founders, sharing stories of the leaders in the lending space to help people who are at that pre-money, pre-lending phase, to help people who are still in the startup phase and who are looking at SME finance and thinking that's where we want to be, 5 years from now. So Mindaugas, I will hand it over to you to maybe give us a little bit of background on SME Finance, who you are, what you do. Maybe if you could focus on the growth path and
Mhm.
maybe one of the biggest challenges you faced along that path.
Okay, so thank you guys for this meeting and the first discussion. Okay, let's do like step by step how we started everything. Actually, previously I worked in the bank. I'm ex-banker. Founders asked me, and hey, Mindaugas, let's start work with SMEs, but not in the biggest banks, but let's do our fintech. Let's do our vision. Let's implement it. And our path and our growth story started in 2016, actually. We started with invoice financing product that time. So only one product, one asset class, as you say, we launched at that time. But step by step, we were growing actually. And since 2016 till nowadays, we are managing like 150 million euros book already. So from 1 million to 150, it's one step. Maybe essentially what we want to mention actually additionally from one country to four countries already. So we started with Lithuania. At that time, we have Latvia, Estonia, and already Finland actually. So step by step, we introduce countries with the different asset classes, not only invoices, but the same leasing, the same short-term loans, and the revenue-based financing already in place. So one country, now we have four countries. Additionally, we already financed more than 1 billion euros during this 6 years with this portfolio. And we already have 3,000 customers, B2B customers in the three Baltic countries and Finland. And it was not easy. Yeah, Matt, it was not easy to grow our book because this path was built with senior lending, with debt facilities, but without no external equity investments. So the biggest challenge I actually met was during this like 6 years period, keep the profit, keep the growth, because we were doubling our revenues and our book, but keep the good NPL level at the same time. So how to balance everything? It was, how to say, quite difficult task for all top management because you should hire the team, but you should introduce new country. But when you introduce new country, you a little bit, how to say, slowing down everything in terms of profit. But step by step, you should grow. So owners, I think, still are happy because we are profitable since the beginning. And of course, profitability is shrinking a little bit because of this expansion, but still, it's a good news for our investors, as we understand, actually.
Well, Mindaugas, that's a super impressive kind of high level. A lot to cover already there. And I think some again of the viewers and some of the people who are checking this podcast out are really interested in at real outset. So if what I from what I've heard, your book is 150 million now. You've done more than a billion life to date. You have teams in 4 countries and you have multiple products, but it all started with invoice finance in Lithuania. And at that outset stage, can you talk more about what went into the planning and setup when you were just first, you got approached by Audrius, he had an idea for a non-bank lender. Maybe what was the first step there, and also why did you even decide to start a non-bank lender in Lithuania doing invoice finance?
Yeah, maybe it's like why we started with invoices. Maybe essentially we wanted to start lending activities. It's one, but how to start and safest way, quickest way, and the scalable way. When you are working on invoice financing, you should have like insurance. That's why it's very important. The part how in our growth plan was partnership with Kofas at that time. It's very early stage. So that invoices was scalable business. It's short-term financing, so you can feel and touch the risk of the clients, meaning sellers and debtors. You can scale more fast this product, and it's like easy to access, to all customer base in at that time in Lithuania, because the biggest banks they don't want factoring services. They don't want to provide factoring services for the smaller customers and the smaller tickets. So why we should compete on loans and leasing? There is the crowding, and that's why we introduced invoice financing for smaller customers, smaller tickets, where is no competition. So step by step, we started with this one, and of course, this COFAS partnership was the key to find a senior lender for that facility, because at the beginning our book was financed by bondholders. We issued bonds locally. It was quite expensive, less profitable at that time. But when you touch the insurance, there is automatically, as you know, institutional funding behind. So it's very important to mention. That's definitely.
Sure. Well, then I think you've hit on a couple things that are quite good to hear, and I think super important for again people focusing on the early stages of their journey. So you started with an asset class that you thought was one of the safest, and that was because of the credit insurance on it. The quickest in terms of you could get up and running quickly, and also there's a short duration on the underlying, and it was scalable, and that was because of the fact that banks weren't lending or giving factoring facilities to these small borrowers. Um, in terms of getting that relationship or that partnership with Kofes, was that something that came out of prior relationships that you and Audrius had, or other people that were in your network, or how did you approach them and then get approved for your insurance line to then allow you to start lending?
Actually, it was like uh, we know the co-fast from previous banker, like ex-banker experience, me and Audrius, and the same Marius, second founder of the SME Finance, because he was factoring product manager in one of the biggest banks. So we three touched very, how to say, deeply this insurance topic from previous experience, and we know Kofas, we know the top insurance brokers in Lithuania. So it's like no doubts why we shouldn't to talk with them definitely. And when we started talks with with senior lenders, so the second question was first question who you are, and the second, do you have insurance? So automatically it's like in scope.
It's great to hear again some things that I think are consistent with threads you hear of most successful lenders or successful startups who get to scale up and institutionalize phase in general, which was you started with your partnerships and you levered experience you already have. So Marius, who is one of the co-founders together with Audrius, who were both working together at the same bank that you were working at. He had the factoring experience, so he had prior experience essentially running a factoring business within an institutional environment. So he already knew essentially what you needed to look at from a credit perspective, from an institutional perspective. He had that relationship, and that allowed you to kind of jumpstart, I'd say, the business maybe, and when you talk about again the choice to kick off with that, and that also was something that was going to help you from the debt funding perspective, can you talk a little more about that first step of debt funding? Because of course, at Fasanara, we are an institutional funder. We kind of like to think of ourselves as long-term growth partners for lenders like yourselves. But I want to hear from your perspective what your thought process was when you were first going out into the market and thinking, okay, we're going to build a non-bank lender. We're going to do the product. We know we can scale. We have our experience in. What was that first step? You said you were funded by bonds, but what was the first step? How did you decide we're going to fund ourselves with bonds? And then who did you approach? How did you go about
Okay, I can share definitely in this path how it was. We are from small country, Lithuania, so we don't have very, how to say, deep pockets in terms of bonds. So when you see limitations behind, you definitely want to diversify your funding sources and go big and go international. So during like all period of SME Finance, we raised 70 million euros on bonds. So we are biggest, I think one of the biggest like bond issuer in Lithuania. I think we are on top three definitely, but it's nothing, it's peanuts according you guys. So that's why we started the work with but work on LinkedIn. We started to visit international conferences for institutional funding, to find institutional funding. And the first step was actually from like a common background from LinkedIn actually, and from Audrius, I think, network, if I could remember. And we started work actually with, I don't know, I can mention this name of the fund or not, but small impact fund from UK with 10 million euros limit. And Fasanara is it's fourth institutional funder for us, but the biggest one, and how to say, the most flexible actually, because at that time these three funds who was financed our book was multi not multi jurisdiction actually. Okay, one was multi jurisdiction, but only one, they financed only one asset class.
Okay, and so that's definitely a common restriction I hear people talking about. A lot of our clients and people we now have multi-product, multi-jurisdiction facilities with come to us specifically because they were limited by their funding constraints in the past. Um, but before we move on, I just really want to highlight, I mean, wow, issuing 70 million of bonds in Lithuania, that's unbelievable. I mean, have you done that though through a manager, or did you do that directly? Again, leveraging the network and experience of your founding team. Was that what allowed you to do that from day one?
Actually, it's not public and not listed bonds, so we can do only on based on our network, and only top management and founders can do locally. So actually, we can't go, we can't do PR on similar activities to issuing our bonds. So it's like very boutique approach, network-based, personal touch, feeling all investors, how do making the webinars for them, representing our results, etc., and our performance definitely.
Sure. And could you talk about, again, because I think a lot of people watching this are quite interested, either our lenders, our starting lenders, but they're very interested on not just talking about the debt funding side, but also the equity funding side. You mentioned earlier that you've essentially bootstrapped. You've
Mhm.
been funded by your own money from day one. So can you elaborate a bit? I mean, did your co-founders Audrius and Marius win the lottery, or how big did you start? How much do you need to start a non-bank lender in Lithuania like that? And you can be broad.
Okay, I can be very honest, and it's like official data. When we started our activities, we have only 100,000 euros in our accounts. So share of capital was at that time
Wow.
100,000 euros. Parallel, what we did, we quarter by quarter issued bonds. So, but it's like private placement, but not equity. And we started land for our customers from day one. But good news, but we are profitable from this day one. That's why we did like few steps parallel. We grow with the book growth. We introduced new countries. We hired more people. When we hired more people, you have bigger book, and how to say, the circle starts. Because we want to go in negative way. If you have money, if you have spread, if you have profit on monthly basis, not on yearly basis, only then you can grow. If not, you keep the same level. That's why we're conscious, on expansion and on expenditures, essentially.
And so was that a mandate from day one, kind of when you launched the project together? You said, we're going to build this lender, and one of the things we're going to do is we're not going to ever be cash flow negative. We're always going to have to be profitable every month.
Yeah, maybe not all month was profitable, but quarters they should be profitable because we always feel this negative impact on very, how to say, daily basis. Then, so that's why yeah, we were growing on monthly basis. You see the spread. Then COVID happens. Maybe it's important topic to touch this COVID event where Fasanara came and we started our activities, not on one product, but multi-product and multi-jurisdiction. It was like breakthrough, maybe we can say, or our change of strategy actually, because before the COVID, we had 80% of the revenues based on factoring and 20% based on loans, short-term loans. After the COVID, and now we have opposite situation. 80%, no less, maybe 70% is loans, and 30-20% meaning factoring and similar short-term financing solutions, actually.
But so that, I mean, that is unbelievable. I mean, that's quite a pivot, and quite a an inversion. But I would say, I mean, can you speak a little more to what allowed you to do that? Because I'm pretty sure part of the driver for that switch was actually some of the government guarantee programs that were also coming into play in COVID, which allowed institutional investors like Fasanara to then get comfortable with those other products.
Actually, yeah, you touched very important topic. During the COVID, we had guarantee programs in Lithuania. We didn't have Latvian and Estonian ones, but the biggest business part was at the time in Lithuania. And the parallel, what we did, and guys, that Fasanara came and they increased the limit based on these portfolio guarantees. So, and we shifted our activities, from invoices to short-term and long-term financing based on the state guarantees. But at the same time, COFAS, Euler Hermes, and Atradius, they cut limits for the insurance very dramatically. So 40%, if I could remember, they cut the limit. And so from 30 million euros portfolio at that time, we shrinked till like 20. So when you have 20 million euros, you should, start layoffs, etc. But during 1 month, we shifted our activities, to the long-term financing based on this portfolio guarantees. So at that time, we not talked about layoffs. We started to talk about new hiring, and we doubled our team.
Wow. But to be clear,
Mhm.
so you did that after you launched the new product. You saw the uptick, and that was essentially term loans that were government guaranteed, and
Yeah,
that allowed then institutional funders such as ourselves to fund them. And
true.
that essentially you saw a huge volume increase. So maybe can you talk more to the uptick and actually the change in portfolio size that you saw during COVID?
So actually, during the COVID, before the COVID, we have 30 million euros. When the COVID started, it shrinked like till 20, and we finished this COVID year with 55 or something. It's almost at 60 million euros. So from 20 to 60 million euros, but only like during half of year, during 6 months. So it's besides governmental lending. Additionally, we distributed the 40 million euros like COVID loans. It's off balance, but we distributed additionally this 40 million euros. So during 6 months, we distributed for our SMEs locally 100 mil.
Wow, that is super impressive. I mean, was this kind of the first example of a non-bank lender being accredited to distribute and originate loans that were government guaranteed in Lithuania?
Definitely, yes. And the fintechs, top three companies in the Lithuania who was distributing COVID loans, two fintechs and one bank. But 70% of all state support distributed fintechs. So two fintechs, including SME Finance. Yeah, definitely. So essentially, the fintechs works very well in that way. They see more opportunities than the risks behind. So in terms of governmental lending.
That's super impressive. And I think we've actually covered a lot of ground so far already on your journey and evolution. And so, we talked about the outset, the planning for the first product. But then can you explain maybe was it COVID that brought the new products, or when did you launch the second product? First, let's talk about that, and then we'll talk about when you expanded to a new jurisdiction. What were
Ah,
those inflection points?
okay. Yeah, let's divide. Before the COVID and after the COVID, it's one, and nowadays situation. Okay. As I mentioned previously, in 2016, when we launched, SME Finance, dominating product, and our flagman was invoice financing. It's like 80% of the revenues, and a small piece of short-term financing. It's like credit line or similar product actually, but 90% factoring, 10% short-term financing. Then, step by step, we started think that short-term financing based on loan product is suitable for our customers because it's like complementary products for the invoices. And then we a little bit increased credit lines or short-term financing, but it's not more than 20%. So 80-20. But during the COVID, as I mentioned, the insurance, they cut at the limits dramatically. So the invoice financing portfolio shrinked, but uh, COVID portfolio guarantees, other governmental lending starts. And then we think what we should do, or keep our strategy based on factoring and not change anything, or we can use the state support and grow more faster, more rapidly, and of course help for our SMEs. So we have know-how, we have the same customer base, we can upsell this customer base based on these products, And essentially, at that time, the state start support our SMEs not on portfolio guarantees, meaning the security side, but compensate interest rate 7% yearly, but not for factoring, but for the loans, all kind of loans and leasing facilities. So we shifted automatically as well our product range. Uh, and the portfolio, as I mentioned, portfolio growth was impression at that time, but not all products are scalable. Not all securities will be prolonged from the state side. What we should do later stages, and our newest product or newest asset class, actually, it's nowadays product, revenue-based financing. So at the beginning, summarizing, this journey, at the beginning, it was financing short-term loans. Later, long-term financing and short-term financing based on portfolio guarantees and state support. And finally, for the digital business, for e-commerces, revenue-based financing, and where we see a lot of opportunities here.
And so if I'm kind of hearing you correctly and summarizing, it sounds like you started with what you knew and what you knew you could get debt funding for, what you could
Hmm.
scale and what was safe.
Hmm.
It sounds like COVID was actually the inflection point for SME finance. It sounds like
Definitely.
COVID and the introduction of these government support schemes actually provided an opportunity. And I think this is a huge, lesson and something that all founders should hear loud and clear is that market turmoil, is that down cycles, idiosyncratic risk events, they can always provide opportunity. And we're
Definitely.
going into a recessionary cycle now. I think this is going to provide potentially different opportunities for lenders.
Mhm.
But it's so good to hear that you took essentially a negative situation and you said, okay, based on this government support scheme, what types of lending will be supported? Number one. Number two, which types of lending will get then this government interest repayment on, in addition to a guarantee. Number three, you launch those products. And it sounds
Mhm.
like, based on the 70% of COVID support came from these fintechs and 100 million alone from SME Finance,
Mhm.
sounds like it was a huge success.
True, Matt, you missed one topic, and our senior lender supported this multi-product approach. It's very important. If the senior lender will say, or he reject this asset classes, so what you should do? You will decrease the limits, etc. But good news that at the time, the same Fasanara, we are happy with them. That's why they supported us during this time. Uh, they closed the limit with SME Finance team remotely from 30 million euros to 120. So it was digital approach totally, not physical visits, anything.
That is in the spirit of Fasanara's DNA, is essentially taking the quantitative approach to analyzing the portfolio using your substantiation of, again, a government guarantee scheme, and then leveraging the credit backgrounds of the bank employees you have as credit risk officers and underwriters to substantiate you would have the capacity to lend these products, and then making that decision in a quick way to let you grow and basically seize that opportunity. I think that's something that Fasanara definitely prides itself on doing, is enabling lenders to reach their full potential. And so on that point, though, I'd actually like to hit on how many people did you grow from? So pre-COVID, what was the size of SME Finance, and post-COVID?
Okay, in pre-COVID, I think it was like 20, between 20 and 30. Yeah, between. I don't remember exactly, but it was max 30. Now we have like 140, 45, 46, 47, something. Of course, one third of that is tech team. So yeah.
Yeah. So 7x growth. and that's extremely impressive. That of course that 7x growth in the workforce came essentially in line with the growth of the portfolio, so that you still maintain profitability. I think that's a key kind of lesson there, because I think many lenders come to us, especially who are earlier on in their growth phase, and talk to us about needing to show growth at all cost. And I think now more than ever in a recessionary cycle is the time when hopefully people can focus on profitability and take a note from SME Finance's book. But maybe if you could talk to me about, we've talked all about uh, positive developments. Can you talk about maybe one big challenge you had to face? I mean, it sounds like COVID was a challenge. You saw the insurance limit get cut, and then you launched new products. That was a huge success. Are there any other big challenges you faced, in the lending business itself? Were there any issues with underwriting? Did you ever have a fraud case? What were some challenges you faced in establishing the lending business?
Okay, maybe I think the biggest challenge, for us during this all 6 years was like uh, to prepare actually and set up our team for tech development, I think. Because at the beginning we are talking about the fintechs. At the beginning we were fin without tech. Now we started invest after when we earn quite substantial amount of money, we start and invest into tech part. So the shift preparing scalable products with meaning less people, less operation risk, less client acquisition costs, this reporting and everything, all client journey, it should be digital. So I think the biggest challenge it will be like for the future to prepare everything totally digital way, from the beginning to the end, from the client acquisition to the, how to say, covering the loans, and all journeys behind in the back stages and in front line. And it's difficult to reach this level because not you want to integrate with some, how to say, platforms, meaning platform to platform integrations. You want, but maybe they don't want. It's one. So when you have integrations with them, maybe you have bad creditability or bad how to say, conversion rate from this client acquisition channel. If you have integration, but there is no securities behind, so our investors, as you know, they don't support this asset class because there is risk behind. So, so how to manage this growth, uh, combining all stakeholder needs, investors needs, owners needs, client needs, our employees needs. So it's tough now. So but we see opportunities here, and that's where we are talking very closely with our stakeholders what you want to achieve in short term and long term. We already know what Fasanara wants to achieve with us, so we already know that. We want to finish this 100 mil facility, fully digital integration from our book side. We already know. From our customer base, we want to embed our platform with others' platforms to get more clients. So we have, how to say, distributed roadmap. So, and we are step by step implementing them. And it's challenging, it's costly, because we are participating in landing business. It's not how fast you can land, it's how efficient way you can bring the money back as well. And finalizing the idea is how to balance it. I think it's the biggest challenge. I can't answer into your question what's the biggest challenge. For me personally, how to balance all these angles at the same time. Keep the growth, keep the NPL level in good shape, uh, keep profitable business lines, but keep the expansion, how to hire best talent because they want to get bigger bonuses. So for me, it's like where to push. There is, of course, angles where to push, but if you push too hard, you will lose something, Or if you will too lazy, you will, how to say, pass opportunities. Okay.
And of course, then uh, that I think description highlights the classic sales pitch of you can have something that's there's cheap, fast, and good, and you can only have
True.
two. So which are you gonna
But
pitch?
we
Which are you
want to
gonna
reach that level, but we want to get all three.
There you go. And
We
that's
want.
that's that's going for it for sure. That's going for it. I heard you in your answer there talk about essentially connecting with other platforms. And I think this kind of brings us to a topic that I really want to get into and get your expertise and your input on, a trend in maybe borrowers' needs or behavior that you're seeing, and maybe that's kind of connected to this play to connect with other platforms. Could you talk more about that? And again, maybe that's the revenue-based finance or merchant cash advance products.
Yeah, actually, yeah, you mentioned these two products, but why we touch this angle? Invoice financing, short-term loans or long-term loans, the same leasing facilities or the same revenue-based financing. It's commodities, it's a money, so it's nothing unique, But what is unique, according our, plan, is how to build ecosystem and infrastructure to get and access easy access to the clients, how to get these clients, how to touch them, click to action button, it will be unique, and who will integrate your software with the platforms around you, where is the money flow or money flows. So they will win this game, and our plan is to integrate, to prepare the gateway for other customer platforms, where they can put invoices, where they can put click to action activities, get financing powered by SME Finance. That's why we integrated our solution with the e-shop marketplace, biggest one in the Baltics. We want to integrate our solution with one um, invoice financing module in Finland as well. We want to integrate, our platform with mobile POS provider locally and globally, where you can leverage turnovers based on revenue-based financing product and technology.
I think something I often see, which sometimes fails on the lender side, is solving a problem that people don't have, or offering a product that doesn't actually serve a purpose. But I think with SME Finance, it's been very clear development and evolution of the product set to serve specific customer needs that you're already engaged with. And can you talk more about who your core customers are, and who is SME Finance serving?
We are totally B2B, definitely. Actually, in our book, dominating traditional businesses now, cargo transportation companies, logistics companies, construction, small developers, manufacturing, some services, and this farmers. But for the future, based on this digital project and digital approach, we prepare basket for digital businesses, SaaS companies, startups, and similar digital businesses. So, and we're expanding on that way, because all these, I'd say, traditional businesses, they are old-fashioned. They want to get loan with pledge, and it's less scalable. They want to get leasing, so it's totally not scalable. Where we want to grow, we want to grow on scalable products, invoice financing, short-term, long-term loans based on portfolio guarantees where you don't need collateral, revenue-based financing or merchant cash advance. This is scalable products. but not all these traditional businesses they understand. That's why, but digital businesses they understand, embedded businesses they understand. So where, and that's why where we see this opportunities for the growth.
And so do you envisage a shift in the profile of your borrower base? It sounds like your current borrowers, a lot of them are very kind of brick and mortar businesses, and then you're launching these new products to target more digitally native businesses. Um, is that kind of is that what's envisaged for the next 2 years, 3 years, and beyond? Do you want to have much more of a concentration of digital clients?
I think we will see that on product range. We will see that. I think during like couple of years, will dominate invoices. Of course, we will have loans, but scalable ones, meaning a little more than unsecured lending or based on portfolio guarantees, revenue-based financing, and buy now pay later. I think we will have like significant part for that because digital businesses they will use for their customers, for their merchants or end users. So it's one. And but leasing, I think, will die, or it will be like local one for Lithuania, Latvia. Sorry, for Lithuania and Estonia only, because we don't have even now in Latvia leasing. So we will see how it goes, but I see more opportunities where it's more scalable and digital products actually.
Okay, and that's clear that that's the future for SME finance. That's the direction you're pushing in, especially hiring out all these developers and building the ecosystem. So that's something where we're also super excited about at Fasanara, given that our focus is on servicing fintech lenders who build again scalable lending businesses. And for us, it's not about just getting to, as you have, 150 million portfolio and filling the next 100 million tranche. It's getting beyond that, to the level where we can hand over our facility to our in-house capital markets team, and then Patricia Lando, who leads that team with her 25 years of high street bank experience, can then do the arranger function, the kind of beauty parade, go around to our network of established warehouse providers, Deutsche, JP, Credit Suisse, Goldman, UBS, BAML, and NatWest
Mhm.
to get you the 300, the 500 for one specific product, and then our money would move down to the Mez, and we're going to help. Our goal is to get you, SME Finance, and all of our clients to the state where we're doing public securitization exits with you. Um, so that's a thing that's super good to hear. You're focused on again scalable products, scalable growth. Um,
But secured lending
that's true.
additionally, yeah.
Yeah, indeed,
Because
indeed.
all our
We
investors they want to have in case of what is the behind your
Mhm.
facilities they want to see there is a collateral, or it's digital collateral, the same insurance, or it's state guarantee that is commitment from the state to pay back in case of default, or it is real estate where we can sell in the secondary market, yeah.
clear. Clear. So always secured,
Yeah.
some type of security. And that's again, I think, a hallmark of SME's lending type, and a function also potentially of the jurisdictions you're in. And so maybe if you could also jump into now any kind of macro developments that you might see developing in, again, these jurisdictions that you're currently in. So Lithuania, Latvia, Estonia, Finland. Are there any new developments you've seen over the last, 3 months that you envisage for the next 3 months that would impact essentially, the lending landscape or credit trends?
We will see. We're quite young, in the Finland, but we already have small portfolio. Uh, what we see in the Finland actually, small unsecured loans. It's one, a little bit invoices, and real estate backed loans will dominate there. I think when we will integrate our platform with some potential, marketplaces, revenue-based financing will appear then. But now we don't have such type of activities. In Estonia, we have revenue-based financing already because we have partnership with the biggest one marketplace. It's one a little bit of leasing. It's not scalable, but locally it's very popular, even more popular than secured lending in terms of loans. So Estonia, it's like leasing country, and they want to pay without down payment even, but it's tough to manage. But somehow we can get some down payments for the leasing facilities, and uh, and of course, yeah, in all countries, invoice financing or factoring activities is in place because wholesale and export based activities are there. And Latvia, mostly, they don't care factoring, they don't care revenue-based financing, they don't care leasing. They have only loans actually. They can't understand, all other products. But why we don't know? Yeah, it's very near. It's near to Lithuania, a couple of 100 kilometers, but uh, smallest market from the three Baltic countries. But it's like not so, how to say, not scalable market as we see. That's why they have like only niche player with maximum 5 million euros portfolio. So our biggest competitor in Latvia with 5 mil. So we have almost 20. So like we are 3 times, 4 times bigger. So, as you see, in Lithuania, full scope of products because Lithuania is the most advanced. Because of course we are here and we understand the market, we know the network, we know how to land. We have digital channels here, so it's the most advanced, the biggest market for us, and we will see who will dominate here. But from nowadays, biggest asset class is secured lending and loans. Actually, the second one is the invoice financing because it's flagman and it's oldest product. Third one it's a leasing. We have leasing here, and fourth is revenue-based financing because it's new, actually. But it's growing as well. But during this winter period, we will see. But essentially what we changed during couple of actually a month, the playbook of for each country. And nowadays it looks like this: no unsecured position. No unsecured position for asset class, per product, no less operational risk, no credit risk. So, we are conscious on risk now. So that's why we changed a little bit lending rules already.
So if I hear you right, it seems like, in preparing for a recessionary cycle and being
Mhm.
aware of what's coming, it's already thinking about making sure the security is in place, the strength of the security you get, the types of pledges, the types of personal guarantees, making sure everything is again as secure as possible. But could you talk a little about kind of the pricing element as well? Because of course we're in a macro environment where central banks have been raising rates steadily, for the last 9 months. Essentially, that is essentially not just serving a macro function to kind of try to combat inflation, but that's a reflection of the fact that most people are pricing in that the defaults are going to increase. Can you talk about
Mhm.
how you've been approaching pricing and maybe how you approach that discussion with your borrowers?
Uh, of course, we are talking with them. It's tough question in Lithuania. We're quite cheap country, And from common background, because we're talking a lot with our other investors, with bondholders. We see the expectations from them. We see expectations from you guys. We talking with other potential, partners as well. We are getting like soft commitments from them, but it's like only talks. But when we have a feedback from our investors, we want to keep the spread. At the same time, we want to bring the bigger price for our end users. The step one, what we did and we are doing now, we are repricing our portfolio and our customers on Euribor. Like it's one step. The second step, for new origination, for new facilities, for bigger limits, we put 0.5, 1% additionally. And step by step, we want to increase prices because of the Euribor and because the bigger margins, because expectations, as you mentioned, from the investor side, they want to get more yields, because there is a common market, state bonds, etc., etc. We competing in that market, and we understand that, and our client base should understand as well. But it takes time to reprice. It takes time to negotiate with them. It should be good timing, of course, based on contracts, based on covenants, to talk with them about other level of the pricing. And of course, if our competitors do the same, it's easier for us. Good news that our competitors lack of money, it's one, and they want to get bigger yields as well, including direct competitors, the same banks. They want to get more from the logically.
It makes sense, and I think it's just a function of again, an increasing rate environment. Pricing has to go up, and I think it's again always helpful from the debt investor perspective to work with lenders who understand that concept, and that at the end of the day, the pricing is going to be passed on to the borrower, and it's again accommodating for an increased risk profile related to the macro environment.
Yeah, it's everything totally logical, because you can change the prices, but you will eat the spread. And what's next? When you
Yeah.
eat the spread.
Well, then you're no longer profitable, and then we're
Yeah.
not here. So,
Yeah.
well, now we're coming to a part of the podcast where I'd like to, I like to call it flex time, and I want to give you the chance to talk about what you feel is the single biggest achievement that you've achieved with SME Finance, that you feel was maybe the single biggest milestone, or I have a feeling maybe it was going through COVID, but what if you had to pick one single thing that you would want to shout from a mountaintop about SME Finance, what would be that biggest single achievement?
Okay. One single achievement for all team, in general. I think, uh, essentially, I think, okay. It's a good question, Matt, because we have a lot of maybe it's big achievements for us, but smalls for you, for other stakeholders. But I think in long run, we're changing the market dramatically in the Baltics, because before SME Finance, we have 3 million, 5 million euros non-banking lending market. It's like zero, zero, zero. Now, all fintechs, including SME Finance, because we were like pioneers here, we have in Lithuania only around 500 million euros alternative lending market already during 6 years. So, and our biggest achievement, that top banks, they see us as a competitors. Before that, they think that we will bankrupt like during 1 year or 2 years. It's achievement. They see competition with us. We don't see because we are small, but they see as a competitors. I think in general, it's recognition from the market that non-banking lending activities exist. There is a players. that you can get funding not only from the banks, not only from small capital markets, what we have in the Baltics, but from fintechs, from digital lenders, from alternative lenders actually. And it's recognition, because we have 3,000 customers already. It's not only SME Finance and development of this market as well, because where is the competition, there is a progression. If you are alone, there is like lacking. You think you are good. No, you are lacking already. You are behind.
Well, that is a unique perspective that I think is again something that's just super refreshing to see that you welcome competition, and I agree 100%. You get
Mhm.
better by competing with people. That forces you to innovate, that forces you to think of the way to do something better and more efficiently. And we've seen that again. We're openly biased because we of course have a strong relationship with SME Finance, but we see that in your evolution over these last 6 years and in the last couple of years that we've had a funding partnership, but driving essentially the non-bank lending market, the development of it in Lithuania is something to be super proud of. Um, one last essentially section I want to have on the dividend is essentially called lessons in lending. And if you had to pick, so we just talked about the biggest achievement, and that was pushing development of the non-bank lending market in Lithuania. Now, if you had the single biggest lesson you would pass along to someone who's trying to build a lending business, essentially, what would be the single biggest lesson? Just one single thing.
Ah, I know already what to answer actually. In that way, actually, please invest ASAP into tech part, ASAP, and prepare your business, go big, and prepare your product basket, your backstages, meaning the core and everything for multi-product, multi-jurisdiction, and and scale your product like in digital way. We started invest into tech more only after 2.5 years of operation. So, but if we will start invest earlier, so I think now we will be like not only like 2 times bigger, but bigger. We definitely know that we will be bigger. So don't don't afraid to invest into tech. Focus on that part. I think, yeah, and build this technology from scratch in house. What we did with our factoring core system.
Okay, well, Mindaugas, I have to ask though. So you said invest in tech early, build things in-house. If I'm a founder, what if I say to you, that's going to be super expensive, and then we're not going to be profitable? What? How do you balance that? Essentially, I think
It's
that's the
tough.
real question.
That's why I mentioned it's how to say it's challenging to balance everything. So,
Yeah,
but you can do like baby steps at the beginning. You can do parallel everything.
yeah,
If you have a good sales team, and you are profitable essentially from from the spread, we can say. So you
yeah,
already have and you don't have liquidity or cash flow problems, meaning that your portfolio is good, so you can invest already, because all your tech investments, it's a capex. You
yeah,
can't it's only cash flow, but not P&L, how to say, profit loss statement level. So
yeah.
invest if you don't have liquidity problems, and there is a spread behind, meaning that there is sufficient cash flow. Don't afraid.
Clear. So don't be afraid to invest in tech, but do the tech investment in a profitable way. I think that's
Yeah,
that's the big way, the big key point. And
but
so
it's
now,
like step by step. You hire a small team who can work on tech, not 50 people at the beginning. You can do
yeah,
like baby steps, as I mentioned. we started with outsourced vendor, build our factoring system with 5 people. And that's it.
Sure.
Now we have 50 people and 2 more vendors. So meaning the team who is working with tech part like 70. But
Right.
only now, nowadays, where we have a book of 150 million euros, previously we have a small team of 5 people, and it's like manageable.
Clear. Well, it's been really great learning more about SME Finance, about your growth journey, about starting as the two founders and yourself at the bank, launching a product you knew, growing it and taking advantage of what was a negative event in COVID, but using that to supercharge the growth of your portfolio, launching new products, tripling the size of the portfolio, coming out essentially on the strong side. Where can people find SME Finance on the web, and where can they find you, Mindaugas?
Yeah, actually, they can find physically in Lithuania, in Vilnius, in Latvia, in Riga, in Tallinn, in Estonia, in Finland, in Helsinki, and of course, webpage smefinance.eu.
Perfect. Well, Mindaugas, thank you so much for being the inaugural guest on the first episode of the Digital Dividend. Really appreciate it. It's been a pleasure. Thank you so much.
Pleasure for you guys, and let's keep in touch. Thank you, Fasanara.
Thanks.
Guys, you are
Thank you.
strong ones.
Thank you, sir.
Thank you very much, Matt and Mindaugas, for joining us today. This concludes our first episode of Digital Dividend. We hope you enjoyed it. Follow us on all major podcasting platforms and not miss any future episodes. Until next time.